So Dow Jones fell by 0.20% yesterday, where Nasdaq was relatively flat. It was down by 0.11%. Gift in Nifty is indicating a positive opening today, but it's up by 0.15%. Markets overall are in consolidation mode with a downward bias. US 10-year GSEC has moved to 4.16, and US dollar index, which formed a bottom at 99.7, is now trading at 102.4. It touched a high of 100.2.6. Uh, the resurgence of dollar is the main reason for FIs to sell in the emerging markets. Although yesterday data was not that high, for the time being, volatility is expected to continue. As per as our Quantec model, both Nifty and Nifty Bank are bearish now, and they are in sell-off mode. Um, I think the Fitch credit rating has just acted as an excuse. Markets were overbought globally and domestically also, and they just needed an excuse to see some sort of correction. At this point of time, based upon the results which are coming through, what we can see that momentum sectors where the earning momentum is strong, capital good and infra, pharma, NBFCs, although banks are strong, but they are showing a mild resistance at this point of time because of the moving yields in Indian domestic market. And because of that, their other income or treasury income get impacted when they have once they have to take hit on the uh, held up held to maturity book. The other sectors which are showing positive bias in earning is auto ancillary, cement mild positiveness. The sectors which now has moved sideline consumer, the trend is not strong in consumer overall. Banking is in sideline because of the rising yields and not because of the earning impact. Consolidating to bearish sectors are chemicals are basically giving bad spat of returns. And I think the broader reason is very simple. There is a huge inventory. Majority of the chemical companies are saying that before Q3 FY24, they don't expect stability in volumes and realization. Same is the trend almost in agrochemical companies. IT companies, I think everybody has discussed this thing earlier, but we are not seeing any big resurgence or in order book to give any positive guidance here also. Good trends contribute to rural economy in a good way, and they're likely to boost to the rural economy. So the players on the rural consumption like Dabur, Mahindra and Mahindra, Escorts, two-wheelers, TVS, Hero Motors are likely to see better days in September and October. Uh, but see, this will not be a very big sell-off according to our reading. Maybe Nifty may cool off by another 400-500 points from current level, and then started forming a base. The stock, it will be a stock specific market on mid and small cap side. The stocks which have triggers and which have the earnings on their side may not fall in a big way. On the other hand, the stocks which are surprisingly negatively on the earnings side can fall in a big way because the valuations have been quite rich for a lot of stocks in a mid and small cap space. From the yesterday results, where we find positiveness, the results which are above expectation, LIC housing significantly above expectation. Quarterly EPS is 24 rupees, which is very high. Eicher Motor also surprised on the positive side. The volumes as well as EBITDA margins both surprised positively, and the numbers are above expectation. Another company which is cheap also and which surprised positively is Mahanagar Gas. In pharma, both Lupin and Sun Pharma surprised positively on the number side, but Lupin number include one-off of around 240 crore. So one has to exclude that. After that, it is not a very big surprise, but Sun Pharma numbers are much better. On the banking side, Karnataka Bank came with numbers and give good guidance. The provisioning is declining, and that is what has boosted Karnataka Bank number. Zomato also reported minor losses. and seems that Zomato is turning around in a good way. I think they're more positive now around Blink, rather the core business in terms of growth. And so we see even Zomato results have dramatically improved. Some of the results which were below expectation, Deepak Nitrate, typical chemical company. In auto ancillary, Minda Corp also surprised on the negative side. Clean Science in the chemicals, again negative results. Avas Finance, below expectation results. And Pyramid Pharma surprisingly reported a loss. Last quarter number was comparatively better, but this quarter number have again declined. We will see the detail and then comment, but seems that stock may saturate from these levels. Some of the stable and inline results with expectations were Fusion, Microfinance. This has remained in our recommendation list and GM recommendation list also. Blue Star, Dabur, and Kansai Nerolac. So this is all from our side, friends. Now I will hand it over to the technical team.
So another red day for the markets, right from opening gap down to continued selling throughout the day. Each of the indices closed with a loss of 0.5 to 1% yesterday. Nifty OIPCR for 10th August expiry has come down significantly to 0.66 level, and for Bank Nifty it is at 0.60. OIPCR numbers for both the Nifty and Bank Nifty have come down to support zones and call for a breather bump up. India VIX closed on a flattish note at 11.28%. Heavy call writing in Nifty is one of the reasons why we are not seeing VIX jump above 12%. FII sold for the third straight day in cash segment and index and stock futures as well. To add to it, significant buying seen in index options indicating a negative outlook for the day. Since the beginning of August, FIIs have sold net 2,288 crores in cash, 4,347 crores of index futures, 7,538 crores of stock futures, and bought a huge 37,757 crores of index options. So no respite on FII participation front. The long short ratio has come down sharply from 70% odd levels last month to currently at 40%. That is 40 longs against 60 shorts. So the bias is turned negative. DIIs have been buying in this correction since the beginning of August. DIIs have bought in the cash segment to the tune of 2,763 crores. Now the technical setup for Nifty has turned bearish on breach of 19,500 to 550 area. The next major support stands in the area of 19,200 to 250, where Nifty is likely to bottom out in the short term. On the upside, previous support levels will now act as resistance. So on the upside, first stopover point will be 19,500 to 550 area, which coincides with the call writers' resistance for the 10th August weekly expiry. Highest open interest for weekly expiry stands at 19,500 call with nearly 1.10 lakh contracts, and on the put side, highest OI is pegged at 19,400 strike with an OI of 88,000 contracts. So clearly, call writing is much more than what the put writing positions are currently in the market. Options built up today needs to be seen how it shapes up on the first day of new weekly expiry for deciding the micro price movement for the day-to-day trading purpose. With a massive selling seen in last 2 days, some of the technical and derivative parameters have turned oversold. So probability of a sideways to a small bump up price action stands high. Nifty has been making lower high and lower lows on the daily charts. The first indication of a recovery and a possible halt on the downward spiral would be a close above the high of previous day's candle. That level for today stands at 19,540 odd levels. However, if a bump up rally plays out on expected lines, do not get carried away. Use it as an opportunity to exit longs and create fresh shorts. The bottoming out area of this downtrend is placed only in the region of 19,200 to 250. End of downtrend will be only once Nifty manages to cross 19,600. So currently we are dealing with a trading range of 19,200, 250 to 19,550, 600, within which volatility is likely to remain high. We suggest avoid carrying any option positions over the weekend. Stay light and stick to intraday trading. Start building carry forward option positions from Monday onwards. Also, strictly avoid any naked unhedged option writing, as gap openings and huge intraday swings will be a frequent phenomena for the coming few days. As an actionable for the day, sell Nifty in the area of 19,470 to 500 for an intraday target of 19,400 and 19,350 on the downside, keeping a stop loss of 19,560. Now moving on to Bank Nifty has resumed its character of an effortless 500 points daily mover after a long phase of slow and silent moves in last 2 months. Yesterday, Bank Nifty has given a hope closing just above 44,500. There's a rounding top formation on daily charts, breakdown point for which is around 44,500. The level was breached in intraday, but Bank Nifty managed to close a tad above. In case of a closing breach, the target for this breakdown is pegged near 43,600 to 650 area, with a minor support at psychological 44,000 mark. The structure negates only above 45,500. Till then, every pullback recovery attempt will pose the risk of sudden sharp sell-offs, and previous supports will again now act as resistance points. The new weekly expiry series starts with highest OI placed at 45,000 call with 1.33 lakh contracts, and 44,500 put with 97,000 contracts. Now, since the fall has been huge and sharp, a pullback, if any, will also be sharp. But as mentioned, do not get carried away. From current levels, one can position for a pullback up to 44,950 to 45,000, as long as Bank Nifty manages to stay above 44,275. Breach of 44,275 level will trigger another round of sell-off up to 43,800 and 43,600 levels on the downside. On the upside, end of downtrend and fresh rally will only be once Bank Nifty manages to cross 45,500, which was the support base at the beginning of August series. Now, on the sector-specific action in this entire mayhem, one sector that stood out was pharma. Now, within this sector, most of the stocks have run up quite a bit. But from current levels, we are positive on Torrent Pharma for initiating longs from current levels of 2,000 for a rally up to 2,100, and a stop loss can be kept at 1940. So that's all from my side. I hand over the call for further updates. Thank you.
Hi, good morning all. This side for the currency and commodity update. The Bank of England raised its key rate by 25 basis point, and the Bank of England's vote split was 6:3, with six members voted for the 25 basis point rate hike, two members expecting 50 basis point hike, while one member, Swati Dhingra, voted to keep the rates unchanged. The US initial jobless claim rose to 227,000 for the week ended July 29, as expected, and the Q2 unit labor cost rose at a rate of 1.6%, which is below the expected of 2.6%. Now, the dollar index witnessed a bit of corrective move from the higher levels in yesterday's trading day. It ended the day with a marginal loss, and looking at the overall scenario, a minor cool off can be seen up to around 102 levels, but overall structure still remains positive for a bounce up to 103.50 in coming weeks. So structure is not yet turned negative, but after since it already rallied a lot from lows of 99.50 levels to all the way near to 103, so a minor pullback is possible in coming 1 or 2 trading days. USD INR moved up by around 17 paisa in yesterday's trading day. After a gap up opening, it tried to move higher, but then it remained more or less on a sideways direction with a positive bias. And right now, the highest open interest for monthly series is still intact at 82.50 call option and 82 put option. So the put writers are not exiting the positions on the monthly series, and which indicates a hurdle around 82, 80, 82, 85 kind of levels, since the premiums are around 30 paisa for the same. As far as the technicals are concerned, structure is still positive. There is no sign of reversal as of now. But if we look at the historical chart, then 82, 90 to 83.05 acted as a very, very crucial hurdle and a reversal zone in recent 10 months. The USD INR spot is not able to cross that level, and we are witnessing a selling pressure from that levels. So now we are approaching the upper end of the range, and from current levels, if another like 15-20 paisa bounce is there, which is very much possible, after that it would be very crucial for the long as well as short traders to look at the market and then take a reactive trade rather than preemptive or reversal or a breakout. From last couple of months, we are in fact witnessing that RBI is quite active around 83 levels, and they like central bank is defending that level very closely. But it would be interesting to see whether they come up for fresh selling around 83, or they let the USD INR find its own way. But looking at the historical structure, there is a possibility, and in fact, I am expecting that from 80 to 90, 83 kind of level on the spot, we can see a marginal selling pressure and from the RBI's part, and since the reserves are also on the higher end, very much a selling pressure is possible from the higher levels. But that doesn't mean to look for a sorting opportunity at current levels. Let the USD INR move towards 82, 90, 82, 83 kind of level on the spot, and then only look for a bit of selling pressure, or the best way to play is through the buying put options at that levels. On the commodity space, yesterday we seen some like sideways momentum in gold. Gold ended on a flattish note, and looking at the overall structure, it is expected to remain range bound only. 59,100 is support on the lower side, while 59,800, 900 is the hurdle on the upper end. While the silver ended the day with a loss of around two-thirds of a percent in intraday, it fell below 72,000 mark. However, 500 points recovery was seen from the lower levels, and it formed a hammer candle on the daily chart right now. So if it moves above 72,900 levels and sustains at that level, then we can see a bounce back in silver prices up to around 73,700. So it's a conditional trade above 72,900, while on the downside 71,900 would be the support for the silver. Crude oil, after a sell-off on Wednesday's trading day, it recovered fully in yesterday's trading day, and we had seen a massive rally of over 3% in yesterday's trading day. So again, the implications of a bearish engulfing has been negated in the crude oil prices, and the structure still remains positive for a further bounce back. But we need to see that from last almost 8 months, crude is not able to sustain about 6,800, 6,900 zone, and this zone has been like very active, acting as a crucial hurdle on the upper end. So now at current levels, the risk reward is not very favorable for the aggressive buying, but one can initiate a bull call spread at current level, since it's moving around the resistance levels. So traders can buy the 6,800 call option and sell 7,000 call option, and play the upward momentum at current levels. On GBP INR, yesterday we had initiated a bull call spread, and after the monetary policy which came, there is a possibility that it may move up from the current levels, and we are expecting it to bounce back up to around 105.50 to 105.70 levels in next couple of days. So traders can look to buy a bull call spread in GBP in today's trading day as well if it doesn't open above 105.10 levels. So one can buy 106 call option and sell 107 call option of the GBP INR. So that's it from the currency and commodity side. Now we are open for Q&A.